Hi, you must be wondering, what's an accountant doing in a Santa hat? Well, it's to bring you cheer for the season, and also, I hate to say it, remind you that you only have a small amount of time left before the year end, and so you've got to start thinking about how to minimize your single biggest annual expenses, which is your income tax. There is still time to get a few things in or make a bit of adjustment to reduce your tax bill. Here are some tips for individuals. A very new and important item this year is the reporting of the capital gains or losses incurred on the sale of your principal residence. Now, this technically is not new, since previously we should have been reporting this in order to get the tax exemption. However, CRA is now making it mandatory this year to do this. Also, try to make as much of an RRSP contribution as you can afford, because this is probably your single largest and easiest way to reduce your personal tax bill. However, try to remember not to over contribute, because if you do, it can be very costly. So take a look at your 2015 notice of assessment to see what is your RRSP contribution room, or you can just call CRA and ask them, or ask your accountant to get that information for you. Okay, you can also make your charitable donations before December 31st, 2016. Remember to check the CRA's charities website to determine if the entity that you are contributing to is indeed an eligible registered charity. You want to pay your childcare expenses by December 31st, 2016, and ensure that you get a receipt for this. And also remember that boarding school and camp fees qualify for childcare. Also remember that after-school recreational programs could qualify as childcare. For example, karate clubs that last from the end of school until when parents pick them up. And this will be chargeable only if the parent had to do this in order to stay at work. Now, there are a few credits which this is the last year that you have to take advantage to them. And so I really want you to listen closely and ensure that for each of these, you take advantage of them if you can this year, because after this year, that's it. So the first one is the Federal and Ontario Children's Fitness and Arts Tax Credit. After this year, it will be done. The next one is the Federal Education and Textbook Credit Tax Credit. That will also be eliminated after this year. So make sure that you take advantage of that. And note that if you have unused credits from these the education and tax credit, you can still carry those forward. Also, after August 2017, the Ontario Tuition and Education Tax Credit will also be eliminated. Make sure you take advantage of these final opportunities. Another thing to bear in mind is if you have children who are 19 years of age or older, even if they have earned no income, they should file a tax return, because they will get GST and HST credit payments and may qualify for other government payouts. But they can only get these if they file a tax return. And actually, the amount that they'll pay for 2017, that they'll receive for 2017, is $276 for the year. If you're a first-time home buyer, you will qualify, or you could qualify for the $5,000 tax credit. But in order to take advantage of that credit, you must have taken possession of the home, and you or your spouse should not have owned a home in the preceding 4 years. Remember that you can also claim public transit credits for you and other eligible tax family members, but you must retain the receipts to support this claim. And in recent times, I've found that CRA has been auditing the public transit tax credit more than normal. So ensure that you have all of these documentation to support the claim. Another thing that we need to recognize is that we must file your tax returns as a family if you're part of a family unit, because this way you don't make mistakes and not claim credits or waste them on family members whose income are too low to claim these tax credits. Another reason to file together is to enable your tuition credits to go through, because if the child files their tax return or the student files their tax return before the parent, then the tuition credit cannot be transferred to the parent at that time. Now, eligible dependent credit can also be claimed for a spouse who does not live with you here in Canada but who you support. Now, note that this credit is not applicable to any other dependent, not even a child, as these other dependents who you can claim must live with you, but your spouse doesn't have to live with you. Now, if you own more than one rental property, you may deduct auto expenses incurred for collecting rent, supervising repairs, and providing general property management. But that is only if you own more than one rental property. And most importantly, I cannot implore more, file on time, because the interest and penalties that you will incur is another expense that you really don't need to incur. Okay, so have yourself a wonderful Christmas season, and remember, get yourself all organized for your tax season coming up. Okay, bye.